I also feel like this is a bit philosophical. I feel being content or being happy is as much as an internal journey as an external one, right? And you can go find the next new shiny thing, and that's great. But the point is, what are you solving for? And for me, I feel like a lot of what I'm solving for, I found in this structure and role and working with good people.
Hi everyone, I'm your host Rohit Bhargava, and you are listening to episode 186 of the Startup Playbook podcast, a weekly series where I sit down with successful tech founders, investors, and operators to unpack their journey, lessons, and insights to help current and future entrepreneurs. The voice that you heard a little bit earlier was that of our guest for this episode, Rohen Sood. Rohen is a general partner at Rein Venture, a $50 million venture capital fund with a dedicated focus on fintech companies. This is Rohen's first ever podcast interview, and in this episode, he opens up on everything from the drawbacks and opportunities that came from having Westpac as an LP in the fund, the story behind their Coinbase investment, and Rohen's own personal journey from starting as an investment associate to becoming a general partner over the last 10 years. Before we get into this interview, I just wanted to highlight something for those of you that are watching this on YouTube, which is you'll notice that we lost the camera footage due to some technical issues for the last 15 minutes of this interview. It's the first time something like this has happened, and I sincerely wanted to apologize for all of you watching at home, but hope you're able to enjoy the content regardless and appreciate your understanding. All right, without further ado, here is my interview with Rohen Sood. Hi, Rohen. Welcome to the Startup Playbook podcast, and thanks so much for taking the time to be on the show today.
No problem at all. Great to be here with you guys.
We were just saying that it's your first ever podcast episode. So
That's right. I'm a low profile guy. So it's exciting to be here and to do my first podcast.
Low profile, very humble, but an amazing story that I'm sure we'll get into. But Rohen, for those people that may not be as familiar with you and your background, do you want to share a little bit about your story and what got you here today?
Yeah, sure. So I started Venture back in 2014, which was a very different landscape in venture in Australia. I mean, I think Blackbird had just launched their first fund and Airtree didn't exist. I don't think SquarePeg really existed in its kind of current format. It's a very different time. And prior to that, I came from the exciting world of management consulting and before that engineering. So I came out of university, did like engineering, commerce, the standard kind of path, thought about doing different things, ended up in engineering, didn't like that, went into management consulting, realized I didn't like that either. And for a while, I was like, I don't think this whole corporate thing is really for me. So I was searching around different ideas, different things, always had this combination of technology and innovation in the back. And yeah, just happened to stumble upon this role at Reinventure. They were hiring someone for VC, which I was like, oh, didn't know VC was even a thing in Australia. And actually when I, went down or started going that path and spoke to some of my partners in the consulting firm, they thought I was crazy for even thinking about it. They were like, really? Venture in Australia? So that was the kind of journey that got me into it. It's one of those moments in life where I was like, I want to do something different, want to take a bit of a risk. I'd taken all the kind of right traditional steps to go to a good university, do well, take all the kind of normal jobs. And there's a cultural component of that as well. And then I just wanted to do something a bit different and what felt risky at the time for me anyway. And that's how I ended up in Venture, and it's been 10 years and I love it. Yeah.
I mean, you talk about the sliding doors, that sort of cultural background as well. I always look back and I'm so thankful to my parents. I was born in India, but we moved to Canada when I was 6 months old and Australia when I was 5. And I just feel like life would have been very different.
Yeah.
Had I stayed. I believe you were born in India, but you moved to Australia when you were 12.
That's right. That's right. No, I have a very similar kind of healthy appreciation and feeling lucky for my parents and I guess your parents doing that, because I think the landscape's so different, right? And I think the opportunities that it affords you as a result are dramatically better and quality of life is better as well. And I think that's why my parents moved here, probably for yours as well. So yeah, I spent the first 12 years of my life in India growing up. So I've got a pretty vivid memory of everything there, including high school, which is a very different beast than when it is here. And yeah, coming here was just this, for me anyway, everyone's got a personal experience. It was just this, felt like a breath of fresh air, and in terms of there's a lot less kind of crazy pressure for someone that's 10, 12, 11, whatever they are, versus here was just a different focus on learning, and I just found that I thrived in that environment much more.
Yeah. Did you have a lot of family or kind of connections when your parents moved here?
Zero. So like my family had no family here, no friend relations or anything. So it's just literally just my dad one day. But the story is actually that both my parents went travel, and one of his friends used to work in the New Zealand consulate in India. And they were just chatting about moving there and stuff. And he's like, oh, I'm going to go maybe give New Zealand a go. And he showed her the paperwork and she's like, what are you doing? If you really want to do this, go to Australia. They're like, it's at least a much bigger country. And he's like, okay, fair enough. So he basically went and submitted the papers to Australia, just on a bit of a kind of whim. He's just one of those people who like to try different things. And yeah, got approved at the time. He moved here 2 years before us. That was a pretty hard transition, I think, just coming 30 years ago without any connections, any kind of job, started really from scratch. And then we came 2 years later. And even that was a bit of a shock for all of us. Just we came from a different kind of place and a different kind of, I guess, had things more set up back home, and then coming here and just having to rebuild everything, including all the relationships, was a pretty big kind of journey we all went on as a family. And look, I was 12, so I was young enough that I was insulated from most of it, but I think old enough to realize the kind of realities of how hard it really was.
Yeah. I mean, I think I mentioned this a couple of episodes ago, but I moved around a lot growing up. So I had 7 different schools by the time I got to grade 7. I lived in Iran for 2 years in between. It was a interesting in Iran.
Oh, wow. That would have been an awesome experience.
Amazing. We loved it over there. Obviously, again, similar to you, I was like too young to know exactly what was going on, but like food, culture, people were incredible. But, I think like a lot of those sort of experiences shaped me. And I think I've become more appreciative of my parents and everything they did and the risk that they took as part of that. But I think that made things a lot easier for me to take risks with career and those sort of things, because I'm like, nothing I will do will compare to what they did and what they had to go through back when you didn't have WhatsApp and Facebook to stay in touch with family and really trying to build a life for themselves. Has that been like a similar...
Yeah, look, I think it's a really interesting concept, right? Because I think there's one way you can go, which is that your parents take that risk and you feel much more free to take the risk because you're like, exactly what you said, you've taken that. But other version of what I've seen there is that families take that risk and they're like, all right, kids, we dug the ditches, now you can become a doctor or a lawyer, right? So there's this kind of pressure to not fumble the ball after the risk, right? And I think, I suppose from my own journey, I definitely had part of that initial kind of sense of responsibility that like all this has happened and we've gone through all this. So let's make sure we're really settled and secure. But then you're right. There's part of you that's just like, all right, let's give something a go, give something a try. And that risk feels a lot more comfortable and natural and familiar. And I don't know how much of that is nurture versus nature or whatever it is, but there's something that you're like, cool, I'm happy to go down that path.
Yeah, because I think it feels like we have a very similar story, because I did engineering economics at uni. I think you did engineering commerce.
Yeah, same thing. Where were you?
ANU.
Yeah, right. Okay, I was in Sydney. So yeah, it's probably the same course, just named differently.
Yeah, and I come from a family of just everyone's an engineer. Like you said, 2 parts, either engineer or doctor. We were a family of engineers.
Oh, this is failure.
Yeah. Or that, which I clearly dangle that carrot in front of my parents for a little while, but they were pretty understanding when I decided to quit to start my first company like 12 years ago.
Yeah, wow.
What was, I guess, switching those careers? And I think, like you said, there is that balance of some people can use that background and that upbringing to view that as freedom and have that as an opportunity to take a bunch of risks. For a lot of other people, though, like similarly with a lot of my friends, it's gone the other way where they have to have that stability and consolidate and those sort of things. Again, what was that process like for you to do engineering and then let go of that to start management consulting to then join venture at that time?
Yeah, look, I think at some level my parents have been fundamentally very supportive of everything me and my sister have done. There's very little that they have been like, you can't do that in any sphere of our life. So I think that was just an overarching umbrella and thematic that we had. But then within that, I think I probably felt my own pressure to perform and do well, and at least what I thought doing well looked like, if that makes sense. So when I made those choices on engineering and commerce and then engineering and consulting after that, they were all what I thought to be pushing, like you're doing the smart, good thing. And actually, but even within that, when I was doing it, I changed firms a lot. I was just never quite settled. Like some of it just didn't fit right for me. I don't know. I never felt fully connected to any of those things. So actually, when I took the Reinventure role, I think that was like me changing my job 3rd or 4th time in a very short, like in a 5-year period. And part of me was like, this feels a bit crazy, but I knew that I wasn't happy with the status quo. And it's that whole kind of Einstein quote of the definition of insanity is doing the same thing over and over again, expecting a different result. So I just felt like I had to try it. And actually, I didn't tell my parents before I took the role, because I was like, I'm going to be trying to explain another role yet again in a small amount of time. I don't want to be talked out of it. I don't want that whole, not that they would necessarily try, but it was just that I didn't want to deal with it. So I took it, and then I told them over dinner out, and I did it in a public place. So it was all considered reactions. But look, they were literally, I wasn't sure where it was going to go, but they were like, if that's what you really want to do, go and do it. I did the same thing when I bought a motorbike. I just landed up back home with a motorbike, and my parents were like, whose bike is that? I was like, that might be my bike. So, yeah.
Yeah, I mean, I think there's the parental pressure, and then also the probably societal friendship pressure as well. Like I had Maxine Minter on the podcast recently as well, and we were both speaking about how we both grew up in a household where entrepreneurship wasn't really spoken about and the challenges that kind of come with that. But I had the added benefit of having a set of friends that held an intervention for me when I said that I was quitting my engineering job to start my fashion tech company, which, to be fair, everything they said was true. Like, it was...
Also, I love engineering to fashion tech. I can imagine the reactions.
Oh my God.
Like,
yeah. That was a fun conversation to have. But no, I think a lot of it came from a good place, and everything that they said was actually spot on in terms of what are you doing, what do you know about fashion, what if it doesn't work, and all of those sort of things. But I think for me, a big part of that was I'm okay with this not working out. I just can't live with the regret of not trying this, and I don't want to live my life and look back and blame other people for me not taking a bunch of risks. And worst case, you just come back to doing what you're doing now anyway. So
I think that's exactly right, and I feel like there's a bit of that for me as well, which is in the totality of life, right? It felt like messing up a year, you making that choice, didn't feel like that a big deal when you're 25, 26, 27, whatever it is, right? Versus, I think those choices get harder as you grow older and you have more responsibilities and make people depending on yourself. So actually taking, if anything, in hindsight, I wish I took more risks when I was younger because your freedom and capacity for error is so much larger, right? And also, I guess one thing that I've learned from the investing kind of journey, and I think I learned different things in, like, engineering was very much like precision. Consulting was very much about thinking 80-20, 5 years, and then investing has very much been about thinking about risk and reward and convexity. And I feel like, you can take a year and try a fashion tech company or try what I did or try whatever. And worst case scenario is you mess up a year at that age. But the upside is like look where you are, right? Is in terms of this wouldn't be possible if you hadn't taken that initial leap. And like you said, worst case, you take that year, doesn't work out, you probably come back learning a bunch of things. And look, it's becoming more acceptable as startups are becoming more, startups are everywhere. They're like in vogue now, right? Like it's really the cool thing to do. But like 10 years ago, especially in Australia, it definitely wasn't. So I think it's more acceptable, but I think you have to be a little bit comfortable with that, being a little bit uncomfortable and trying the things and things that feel genuinely true. Like you said, you feel like you had no other choice. And that's how I felt. I felt like I'm not happy here and I have to try something different, even if it's not the thing. Yeah. Because at least I'll know.
There was a podcast that I saw a clip from recently which said sometimes it's better to have a lot more pain because it forces you into a particular decision versus if something's comfortable enough, it's really hard to leave that. But I think the other part of that as well is I just think that a lot of people look at, I will say a lot of my friends would look at that from a very binary perspective of, is this decision going to work or not? And will I be in a better place?
Yep.
Or not, based on taking that risk. But actually it's about all of the things that come because you took that opportunity. So all of the doors that would have opened that wouldn't have otherwise been there. And I think that's the missing part that a lot of people don't really get to see or hold themselves back from. Totally.
But it makes perfect sense, right? Because you think about the structure of just how society and even schooling works. These are not new thoughts or ideas, but the whole system that you grew up in is around get it right. Do you know what I mean? Get the answer right, pass the thing, do the thing so you can get into that next round, get to the next level, right? It's very performative in that way. There's very little of, okay, here's, I don't know, you're trying to drop to an island, here's a tree, cut it down and build a raft, let's get out of here. I suppose we're already in this kind of predetermined system that everyone's solving for the next level, right? Versus going, okay, how do you think more broadly and what kind of just feels more natural or compelling to do? And it is scary, right? Because the truth is, you and me are probably the lucky ones, right? And there's always survivor bias, stories are always survivor biased, right? But that could have easily gone a different way, right? And in which case it would have been a warning tale, right? And your friends that had the intervention, right, or my reputations are actually logically very well founded because you don't want to go through that. Now, if you maybe dig through some of this experience and ask people, would they still do again? The answer is probably yes. Every founder that I know that's been through a tough journey, nobody's like, oh, I'm going to get a job at CBA or whatever, right? Everyone's like, I'm going to do a next company. I don't know what else to do. It's just addictive. So I think there's something deeply fulfilling about it that maybe gets lost in those conversations, right? And look, again, we've also been in a very fortunate 20, 30 year horizon, right? Like it's been a great era, right? So in some ways, probably taking that risk in hindsight was probably the best time ever to take it, right? It might have been different 30 years before that or whatever, right? So yeah.
Yeah. I mean, as you said, in hindsight, and obviously with Reinventure success, which we'll get into as well, of particular investments you've made, it is obvious that was the right thing to do. As you said, 2014, there is no venture ecosystem at all in Australia. You've got people around you, and I assume probably like very smart people that you respect that are going, what the hell are you doing?
Yeah.
What are you doing this for? What was it that kind of made you go, you know what? I'm going to do it
Give
anyway.
it a crack?
Yeah.
I think it was just like, okay, there's a couple of things. I think, it's definitely cause a pause when you're changing that job and the partners in your firm. And if you've been in one of these firms, being a partner is like, I mean, everyone aspires to that level, right? There's a real kind of hierarchy and status there, and they are, the smartest people in the room and all those sort of things. So when multiple people are like, this sounds batshit crazy, you're like, maybe it is batshit crazy. And then they say you should go, if you want to do this, go to Palo Alto office, go to the Stanford MBA. That's how you get into venture, right? You're like, that's all very logical, right? So you have that on one side, but on the other, I just felt, at least for me in my journey, I had done all the things that I was meant to do already, and I wasn't happy. So I was like, okay, let's do something different. Let's take a risk. And maybe venture isn't going to be a thing in Australia. I don't know. And it really was one of those moments where I'm generally quite considered in how I approach things and I weigh a lot of things up. But it was in that moment that I just thought, you know what, let me just try something different. And I remember at the time I was also interviewing for a PE job at the same time. So it was this real kind of sliding down moment. I'm definitely so glad I didn't go into PE and I went into venture, right? It just aligned a lot with fundamentally, I think, who I am as a person, how I think, than any other thing. So I think it was just that. I think it was just how maybe fed up I was of my current kind of circumstances. Part of it was just wanting to do something dramatically different than what I had done. And also I just met the guys. I thought they were great. I just love tech. There's always the obvious things of, well, venture works in the US. I don't know, maybe it could work here. So yeah, it was just one of those combination of things and a confluence factors that kind of took me down that path. And it was definitely on the edge there for a bit.
Yeah. And speaking of doing something very different, so I imagine management consulting is very, like you said, hierarchical, very process driven in some ways. To my understanding, when you first joined Reinventure, you guys didn't have an office. you asked for a laptop and had to go to the store to buy one.
Yeah. No, that was one of the moments that I make the right choice, because like I went into the office and they were squatting with their only portfolio company at the time, which was Society One, and we just had this corner on the side with the other two guys. And I was like, wow, this is it. And I'm like, oh yeah, so I'm here first day. Where's my laptop? They're like, let's go to JB Hi-Fi. And I'm like, right, it's going to be one of those moments. So yeah, it was a very different kind of structure. And then even coming from, looking at the kind of companies and deals and stuff, right? You're coming from engineering and consulting and all these sort of things where it's all very data driven, right? It's what data do you have? What does the data say? How do you make objective choices based on that and then give a set of outcomes? And then you get to looking at seed stage companies. I mean, there is no data. There's very little data, right? So I think trying to change my paradigm from having the deep desire and almost reliance on a deep set of data to make those choices, to then going and making decisions on a very limited set of data or heuristics, was a pretty big transition. And it took me probably, I would say, a couple of years to really get comfortable with that, because you really are looking around, how do you really know? Like, how do you know? You're always trying to say, like, how I can be sure. And this is also that whole risk, reward and failure thing as well. Venture by its very nature and its setup is designed for high propensity of failure, right? And even getting your head into that dynamic is quite challenging when you're not used to it, when you're coming from a world where actually you're working on this particular mechanical part or this circuit and it should be Six Sigma and shouldn't have any failure, right? So there's a really interesting kind of different way to look at the world. And yeah, it was definitely a journey. And I had great mentors to help me, be able to see that. Some of it at first felt crazy. It's like, how can you just jump to these conclusions? But I guess that's part of kind of the skill and preparation of being a venture investor, right? Be able to see lines where there's only a couple of dots. So that was the kind of journey to go through that.
Yeah, which is easier said than done, because there's there are no real feedback loops on a lot of it for a very long time.
I think it's very long feedback loops. So I've been doing it for 10 years and we're only just starting to get feedback. So I feel like I've been in 10 years and I've had one cycle, barely, right? That is, I think, one of the hardest things about venture. Look, venture, I'm not going to pretend, venture does a great job and it's absolute privilege, right? Like every room you walk into there's a sense of excitement, possibility, almost like romanticism of what could be, right? That is not corporate life, right? It's very, very different. And part of that is also you're not trying to protect anything, you're trying to create something. So it's a very different way of looking at the world. But yeah, some of the hard parts of it is that you could spend 10 years doing it and not really know. I mean, you'll have some indication, but at a portfolio level, it takes like good 7 years to know if you're going to even return the capital of the fund, right? And we've just been through an era where everyone thought, they were like hitting out of the park and had great TPVIs, but DPI is very different. TPVI is like the kind of paper returns, and DPI is the actual cash on cash returns back to investors, right? So yeah, it's a very long feedback cycle. And also signal to noise ratio is huge, right? I mean, I know you guys run a syndicate, and it's one of those things where you make these investments, you expect a high failure rate, and you don't, sometimes it's hard to discern luck from skill. Right? Yeah, it generally is. And venture, I think, is quite painstaking in that way. And you really have to try and be disciplined and be honest with yourself. What was it? And look, it's both a lot of times, right? You're not going to you're going to need a little bit of luck as well.
Yeah. Like luck plays such a big part of that, of just obviously right place, right time, but even just getting visibility into those deals, having those conversations, the right thing, having built the right relationship from way back then, or having a particular coffee, it is very, very hard to separate that. And then how do you build a strategy around that? Because how do you know what is more of what things that we should be doing when things can be so random?
Totally. Look, it's very hard. And I think it's even harder now because there's just so much increasing competition in venture, right? So there's more and more people having those coffees, having those relationships, right? It is probably different 10 years ago or 20 years ago, whatever. So, I mean, look, people have strategies in terms of, that's why having a media business or having like blog posting, people do all of stuff as well. I mean, one thing that I found that's worked well for us, which is I guess, interesting or unique, is that we weirdly get attracted to unsexy businesses, right? And there's a great kind of framework, I heard it somewhere, which is like a 2x2 matrix of how attractive and sexy a kind of industry or business is, and then how complex it is, right? And you kind of ideally want to be in unsexy and complex, right? So something that's really complex and sexy is like a SpaceX. Like, sure, of course you should invest in the next SpaceX, but everyone's going to be trying to do that, right? But if you get into something like that's really complex and unsexy, maybe not everyone's going to be rushing to that. And we've had instances of some of our businesses that are probably in that dynamic that on the first surface didn't look particularly, oh wow, I want to spend my life thinking about this. But once you get into it, really fascinating, and that gives you a bit of white space to play in, right? And I think that gives you somewhat of an advantage at times versus the next most obvious thing that everyone's looking at.
Yeah. I mean, obviously 2014 landscape is very different. You guys probably would have been the first fund to have a real thematic focus on fintech as well, I imagine.
Yeah.
How important was that for you guys to have that? And obviously you had Westpac as an LP as well, which I assume was an additional sort of value add for companies as well. But how important of a role do you think that was?
Look, I think it was definitely important. It definitely, I guess, gave us the guardrails of where we wanted to invest. So we definitely pushed those guardrails in the way that I think every investor wants to invest in things they want to invest in, right? Like what the mandate being aside, and you try and think about if you have an edge, that's the question. So we define fintech relatively broadly, right? Like when you first say fintech, okay, cool, you'll just be doing payments and lending and sort of things. And sure, we did some of that, but we also did like software businesses because we saw them as like distribution channels for fintech companies. We did what's a stack of a bank, so like cybersecurity, data, AI, and then we did crypto as well, as which again at the time was like a bit of an outlier. So we definitely pushed that envelope. But I think it also helped us in a way because one, people know what you stand for, but also you are consolidating your knowledge in a particular sphere, even if it's a little bit widely defined. And I think one of the most impactful things you can do is when you get in front of an entrepreneur and you can speak their language, right? So suddenly you have that first meeting and they don't have to explain the basic kind of first 10 terms to you as they've had to other investors. People are like, fuck, like you get it, right? Like kind of helps a lot, I think. So I think being able to compound on that, particularly those industries like the fintech and adjacent industries are relatively complex in their structure anyway. So it helps you go deeper and learn more. And a lot of our investments have been things that we saw something happening at a venture company or at a founder we knew, and they're like, hey, we found this solution or there's this problem. You're like, oh, cool, that's a problem. That's happening in this space. Whereas it would have taken slightly longer for a generalist investor to maybe get to that conclusion because they're doing everything, right? So there is this interesting trade-off.
Yeah. I mean, obviously, Australia's had a tremendous amount of success in fintech. Do you think that that's, obviously a broad question, but do you think that that's possible to do in the same way in other verticals, to have like a deeply thematic focus and be successful?
As a venture firm or as a company?
As a venture fund.
As a venture fund. Look, possibly. I can't say hand heart it isn't or is it, but I can't see an obvious reason why it wouldn't be. You know what I mean? I mean, I guess one advantage that fintech had obviously was that if you think of the structure, right, even though Australia's a tiny country, we've got 4 of the most profitable and largest banks in the world, right? So you have this really big depth in capability and knowledge that maybe doesn't exist in a country of a similar size elsewhere. And also we're a wealthy country, and a rate of adoption of some of these technologies, like Payway was one of the highest adoptions fastest and highest adoptions in Australia. So I think that gives you a really interesting setup to play with. Also, our regulators were very, very globally known as quite strict, right? Which at one level is hard, but it also meant that we didn't go through a GFC because the banks had a really strong buffer. So you come out of this post-GFC space, you've got really strong depth of capability in the market, you've got a wealthy country, and then you've got this massive technology wave coming up, right? That software eats the world kind of thing that everyone was thinking about. So I think those are really interesting factors that came together to make that possible. That could probably happen in another sector as well. I don't know which one because I don't have a good insight on it, but maybe it's something like, again, I'm purely speculating, but we've got really interesting medical companies in Australia as well, ResMed and Cochlear, right? So there could be really interesting kind of thematics there, but I'm not deep enough in it to have a considered view on it.
We're going to take a very quick break from this podcast to talk about an important issue, which is the growth of your business. Specifically, how long sales cycles when selling to large enterprise customers can slow down progress for so many startups. Unfortunately, a portion of this is out of your control, but something you can do to accelerate your sales cycles and sell to bigger customers is to demonstrate your security compliance with standards like ISO 27001 or SOC 2. The problem is that achieving compliance can be a big distraction and a large financial and operational drain for your company. Thankfully, our partners for the show, Vanta, can help with this. Vanta automates up to 90% of compliance, getting you audit ready quickly and saving you up to 85% of associated costs. And Vanta scales with your business, helping you continuously monitor compliance, unify risk management, and streamline security reviews. There are over 7,000 fast-growing companies like Atlassian and Dovetail that use Vanta to build trust and prove security in real time. They've been supporters of the show for a while now and are doubling down in their support for our community by offering $1,000 US off their plans. To access this exclusive offer, head over to vanta.com/playbook. That's VANTA.com/playbook. All right, let's get back to this episode. One thing that you mentioned about speaking the founder's language is obviously the trust that you need to build up with founders that you're working with. It's something that Paul from Slip mentioned, just in terms of not just you being a great investor to have on the cap table, but having someone who's a friend that you can call up in whenever there's kind of issues. I think there's so much information talk that kind of happens about like for founders how to get funding. There isn't that much that gets spoken about how do you build a really great relationship with your investors and really use and leverage that relationship.
Yeah.
From your perspective, how do you think about that in terms of what are some of the things that founders can do, or how do you think about that yourself from an investor perspective?
Sure. I mean, look, I think everything I learned about how to interact with founders was probably from my other two partners, Simon and Danny, who've been doing this for longer than me. And I think our general ethos in this whole space is to try to be as empathetic around that founder journey as we can. And Danny himself was a founder before, so I think he really brings a big kind of anchor into that. And what does that mean? What that really means is don't sweat the small stuff. Founders are already going through a pretty hard journey, and see what you can do to really help and be supportive of that. So I think that anchor of, my kind of version of this coming out of my background was how can you try and be almost in service of founders as if they were a client. Now it's a difficult thing to manage, to be honest, because you have this dynamic, which is that if you have a board seat, right, you have inherent power in that dynamic. And as much as founders want to come to the investors and talk to them, I think there is this layer of veneer between founders and investors that exists, rightly or wrongly, right? And what I've found is as much when you can, when things don't go well, giving that breathing room and not jumping down someone's throat, right? And just having the reality of this is very hard. Most things don't work. And having that compassion, I think, can go a long way. Then hopefully the founder can feel like, okay, I can share more, right? I don't know if they'll share everything all the time, right? Because there is this thing, because they're trying to get the next round of funding from you, right? If you're putting capital. So they're always selling, and it can be quite isolating. Always, maybe they can share with the co-founder, but even that, those dynamics can be tricky sometimes, right? So I think as you can give them breathing room to space, like, look, okay, right? That I think helps a lot. And then for founders, the advice I would give, and I think what I work well is, I think actually trusting a little bit more in terms of what that relationship can take, right? Having more honest conversations, focusing on things that aren't going well, so that when things do go awry, it's not a massive surprise. I think most investors understand that this stuff is really, really complex and these things go different ways. So allowing kind of grace and space for that, I think, helps. And ultimately, these are all human relationships, right? If you can connect at that human level, right, the rest of it becomes just a lubricant for the rest of that whole relationship, right? And it gives you more buffer for some of those more difficult times. And sometimes you have difficult times and maybe you scream at each other or whatever, and hopefully you can come back from that and be like, all right, fine, like as you would with a friend maybe, right? So I think that would be my kind of advice. But look, everyone's different. You have to judge each relationship differently and suss it out, right? One thing I will say is once you bring an investor on your cap table, especially on the board, you're stuck with them. So be thoughtful about that, which I know is easy for me to sit here and say, but I think it's just a reality to be alive to, because you will be living with them in some shape or form, at least with the firm, for the next 10 years or the journey of the startup.
Yeah. And that kind of goes both ways. I mean, I guess investors do have the benefit of taking a portfolio-based approach for founders. So your cap table is your cap table. You have no option of getting out. You've referenced the sort of move into crypto a little bit earlier. Obviously, I think Reinventure is probably best known for your investment in Coinbase. Do you want to talk a little bit about that story and how that came about?
Sure. Yeah. So we made that investment back in 2014, which at the time, crypto was a very different landscape. There was just Bitcoin.
Wild West.
It was the Wild West. I mean, it's probably still the Wild West, but the Wilder West now, I would say. But yeah, I mean, I remember Bitcoin was at a peak price of $1,000 at the time. So very different time. And I joined the guys 6 months after they launched the fund. They had already been talking about this as a concept. I'd never heard of it before. Like, I'd heard of it, but I didn't really have kind of much of a kind of depth into it. And yeah, we started looking around for basically to make an investment in this space. And we canvassed like the local landscape at the time. We spoke to a couple of companies here as well. And our thesis very much at the time was we're going to invest in that basically fintech was a very deep market, and you could have local winners that could deliver venture returns, right? So we were very focused on, and most of our portfolios like that. So we were very focused on local players that could solve. We're doing something in crypto. So we spoke to a bunch of folks. great teams, great founders, but we just came to this realization that actually there was a level of compliance and regulatory burden in this particular industry that it's going to be very hard for a local player to solve. And also we challenge our own thesis a bit of actually this might be one example where you won't have necessarily a local winner, but a global winner, because Bitcoin at the time was one of those few things that was, I guess, didn't have a natural geographic boundary as currencies or loans and all these kind of regulations do, right? So we started thinking more deeply about that. And while we were in that process, we got an introduction to Coinbase, which came from the bank actually. And we were like super excited because every other company we looked at was like 3 to 4 people. This was 30 people at the time. We were like, oh, they're huge, they're massive. So we were like, great. They were trying to do their kind of Series C, I think at the time. They had a 300 mil valuation, which sounds crazy now. And we were like, okay, let's go deep into this. And because the Bitcoin had just had a peak, but it had a crash as well, so it had gone from $1,000 to $300, it was like, it's over. The party's over, it's done, and crypto's going to zero. So they had this round just open. Mm-hmm. Nobody wanted to rush into it, right? Even they had a really good pedigree of investors like USV and Draper and et cetera, et cetera. So we had this opportunity essentially to go look at this awesome company. We spent time doing DD. We spent 3 days up in San Francisco with the team. Loved everything about it. We managed to get comfortable around all the kind of AML KYC stuff that, the bank was pushing us on as well. And yeah, we just bit down hard on it. It's the biggest investment we made from a capital allocation perspective from that first fund for the first check. And it's been a bit of a wild journey, and obviously the outcome was amazing. We sold out on direct listing, ended up doing 11 times DPI on the fund, which felt surreal. And for a moment there, when we were selling, the market cap of Coinbase was higher than the market cap of Westpac, which felt bananas. So yeah, it was definitely one of those moments. But what we were saying before, it took 10 years to get that feedback loop, and there were a lot of ups and downs in that journey. And given crypto such a liquid space, you could see those ups and downs quite materially as well.
Yeah, I imagine, especially at that time, that would have been such a fascinating internal conundrum for you guys to have. I spoke to Simon Kant, who I last had him on the podcast in 2016, which is wild. But he spoke about how I think all of you got invited to go visit Coinbase in the US, and he's kind of spoke about it's almost this temptation of a huge company in Silicon Valley that's to come in there and just be grateful for the opportunity to invest in, like you said, like a clear, at least a global leader at that time, and kind of significantly different to a lot of the companies that you were facing. But we referenced this earlier about you having a bank as an LP in your fund, and crypto, again, just even 10 years ago, just it feels crazy to do that now. Would have felt ridiculous.
It did feel ridiculous, yeah.
Talk us through what was
how
that
do we do it?
What was that kind of internal sort of discussion like to, as you said, write the biggest check out of Fund 1?
Yeah. Look, it was a journey, right? So I remember my first month there at Reinventure, and we had an investment committee meeting, which was with a lot of the senior execs at the time at the bank. And we went up there, and I'd put the deck together, and there was like a crypto, not an investment, but a thesis in there. And I'm like, this is just, I don't know how this is going to go. It's going to go like a lead balloon. But walking into that meeting, I was genuinely pleasantly surprised, the openness of conversation and the level of acceptance around just that we could explore this, right? So there was this genuine, okay, you guys are independent, you do your thing, and this is the whole thesis of the fund is to lay down options for Horizon 3, right? Something that we as a bank can't do. So I was really pleasantly surprised that was the reaction. But then obviously the other side of all that was when we get into some of the actually getting close to making the investment, doing a lot of DD and stuff, there was some pushback, some material pushback. Is this something we really want to be tied to, right? Especially back in 2014. And that was
Fund 1 when you're like reputation and everything's on the line.
Totally. Well, we wanted to do it definitely because we felt like we had got conviction, right? So we were good. But I think even from the bank, there was this kind of reaction, like from outside the IC, also just like this kind of allergic, systematic reaction. What are we doing? Again, 2014, very different time. So, and that was a kind of important point for us because we had our structure of independence from the bank, but it was like only a year in. So I think us able to kind of push back on the kind of pushback itself and then really to get that deal over the line was a really important point, and I think speaks to both the testament of, I guess, the structure and the independence, but also, I guess, ultimately, even from the bank side, for us to let us go do our thing and do what was intended, which is lay down these really big options and give insight into what was happening in the world of fintech beyond just their first and second horizon, right? But it was testy. Like it was definitely, there's a couple of moments there that it could have gone the other way, and I'm glad we fought for it, and that worked, because that would have been very painful to have let that go. I mean, one of my favorite websites on or pages on the entire internet is Bessima's anti-portfolio page. And you go through that, and I'm just like, things they have in it that they didn't invest in. And this are a great firm. But I think I have to admit, as an investor, I have massive SOMO, like sadness of missing out when I miss something. Like, so that would have definitely stung.
Yeah. It's interesting kind of being able to retain that sort of strength and conviction in the face of opposition and fire. It's actually something that kind of came up from quite a few people that I spoke to as part of the research process about you specifically. One thing Demir from Basic mentioned was that he's like, the number of board meetings that he had, and you would ask him a question that would piss him off, but he'd see the value about it the next day. Yeah. And I assume, you know, you were relatively young when you're taking these board seats as well. And as you said, with a board seat kind of comes power and influence and those sort of things. And it would be easy for people to dismiss you as part of that as well, with very valid points that you have, especially when you have a different perspective on that. How do you balance that, and what gave you the strength to stick to your guns a lot of those times when it would have been easy to fold? Yeah,
I think I don't really know why I'm like that. I think, like, I think I'm fairly neutral and unemotional in how I approach things, and my whole thing is seek out the truth, whatever it is, right? Try and get as close as you can to that. So I think I come from that kind of perspective, which I feel like is a helpful neutral perspective. But sometimes when you're pushing on someone's sensitive areas, they're like, just back off. And I think, but I'm like, but this will be good for you, this will be good for us, this will be useful. So I'm trying to come from a really, hopefully, a good place. And I think when people push back, I'm respectful of it. But if I think it's critical enough, I will make sure they understand the risk and repercussions. And ultimately, a lot of times it's that person's choice, because they have more agency or power or at stake, whatever it is. But I think I would be doing my relationship with them a disservice if I wasn't being honest. Because I feel like the easy thing is to just be supportive, right? And I don't know, this might be a little bit of culture. I don't know if you guys, I feel like, I don't know, like, where I grew up was, if you love someone, you tell them what's wrong in their life. Do you know what I mean? Like
whether they want to hear it or not.
Exactly. That doesn't matter.
Yeah.
So there's probably a little bit of that. And I think it's generally coming from a place of, I care about you. Because if I didn't, I would not say anything. I'd be like, cool, do whatever you're doing. It has nothing to do with me. So it's a little bit of that. And I think hopefully, even like Demir, like I love Demir, we have a great relationship, and we've had those kind of the shouting moments with each other, but at the end of the day, he knows it's coming from a good place, and that's what kind of, I guess, underpins it. So you're able to, if you going back to your previous question of how do you have a good relationship and what does it mean, if you have a strong relationship and you get along, then you can have some of those tougher conversations, right? And I think when I was starting out as board member, like I think I was an investment manager or whatever it was. I was like junior. I was also worried. I'm like, will I be taken seriously? Right? Is that because they have to? But what are people actually thinking, and what are they actually reacting to? So I think my approach is very trying to be as differential and respectful as possible, but still making the point as much as I needed to. And I don't know, it's worked most times, not every time, and you have to pick your battles with people. But yeah, I think that's probably where it comes from.
He did tell me a story about when they were thinking about going international, the board, and he said he got so frustrated he asked you two questions. One was, how do you wake up out of bed? And the other one was like, how are you going to cross the road without breaking your leg?
Yeah, I actually remember that. Yes, yeah, that's right. And you know, this is, I think this is a little bit why I love working with founders, because there is a level of true anything is possible, right? And I think you have to do that. You have to believe that. And I think you have to believe that as a founder, you have to believe that as an investor. Otherwise, why are you doing any of this, right? I think sometimes, at least in that scenario, I was playing the role of that is possible, but we have to do this 5 other steps before we can have the license to do that, right? And I think as an investor and board member, I think you have to interact slightly differently to different founders, because everyone has their own approach and view of the world, and you can add something differently. And it's hard to swap in and out of how to do that, but that's kind of part of the role and kind of the challenge. But yeah, Demi was definitely very optimistic around his desire and capability to go overseas, and I felt like we still had more work to do in Australia and nailing that down. So I don't know if I was right or if he was right, but I think he's happy with the outcome, which is helpful.
Yeah, I mean, I think you definitely need balanced perspectives on things. It's not good to have an extreme view one way or the other and that be the only point of view in the room. Is that something that you consciously look for, as you said about just understanding founders and understanding what they need and how best to work with them? Is that something you assess when you're looking at deals or deciding how to work with them?
Yeah, I wouldn't say that if I'm assessing founder, I'm looking for them to be fully balanced across every dimension, right? If anything, it's more you want a spike or two, right? Because I think, I don't know, sometimes I feel like it takes a level of courage and unreasonable optimism almost to go start a company and go on that journey, right? And if you're fully balanced on those things, right, I don't know if you'll necessarily make those choices. So that's not really my filter. My filter is more, okay, what is the one or two things this person's crazy good at, and can you work with them as a result, right? Like they might be really crazy good, but if there's something that's deeply, very difficult to manage, then I don't know. But as long as there is some level of, okay, I can see how we could collaborate, like bring people on board the journey with them. They will listen to some advice, hopefully not all advice, because that's a different thing altogether. I think that's what you're looking for, right? And also somebody that has that courage or conviction with their beliefs to go on this journey. They're not going to take every piece of advice. If they had, they wouldn't have left their engineering degree and done a fashion tech business, right? So that's what you want.
Yeah. Speaking of what you want, so I think like even just your personal journey inside Reinventure is really interesting, of you joining the fund at a time when joining funds wasn't sexy and people were telling you that there's no real market for it here, to then even just sticking by the fund for 10 years. And obviously your own trajectory of going from, you came in at associate level to investment manager to now partner. Again, speaking to Simon about this as well, was he mentioned that obviously he just saw a ton of the value that you were providing, but internally there was this fear that they had about someone poaching you and you getting up and leaving. And I think especially a large part of this space attracts very ambitious, hungry people, clearly like yourself. What made you stick around and stay at Reinventure?
Look, I think I just loved it. I just enjoyed it. Going a little bit back to what I was saying before and how I started, I left a previous career because I just wasn't loving it, and I didn't wake up wanting to do it. I didn't see myself doing the next level or the two levels above that. Whereas I guess I have had opportunities where, things have come up or whatever. I guess I've just kept enjoying the day to day by and large. There's definitely times when you're thinking, what did I do? But and like the guys, Denny, have been overall really, really great to work with, right? And I feel like we have this interesting combination of, we love finding our way to the truth in a muddled way. We love having fun and having a laugh, and I think we're all excited by similar types of businesses, or at least business models. So I think this combination of things, like previously I'd changed jobs a lot, and here I felt like I had found something that was good. And I also feel like this is a bit philosophical. I feel being content or being happy is as much as an internal journey as an external one, right? And you can go find the next new shiny thing, and that's great. But the point is, what are you solving for? And for me, I feel like a lot of what I'm solving for I found in this kind of structure and role and working with good people. So that's why I never jump ship, I suppose. Yeah.
I totally agree with that. What do you think changed internally for you that kind of brought you more maybe like peace and not acceptance, but just contentment?
I think that's one of the reasons I took the original role. So that happened before I started. It was actually that pivotal time where I felt like I had done all the things that I meant to do, had all the things on paper that I thought I had wanted in all the dimensions you would imagine. But none of that led to satisfaction or happiness, at least for me in that moment. So I was like, okay, try something different, right? Which was part of that was the role. And then once doing that, being open to being happy and satisfied with what's in front of you, right? Now, if it hadn't been a career in venture with a fund that performed really well, maybe that wouldn't have been enough, right? But I think it was that. Plus, I was open to this idea of, okay, how do you find fulfillment within yourself with what's in front of you, right? Versus just the next kind of goal. Because, I mean, I feel like anyone that has achieved any level of success in life is normally geared towards the next goal. That's how you get through that first structure of life and school and stuff to get to the next level, right? But then I found all I was doing was like, I'd get the goal. I'm like, okay, goal's done, finished. What's the next goal? And that satisfaction and celebration would last for all of a day, and then anxiety would kick in and be like, how else can I prove myself, right? So yeah, I think it was a little bit of that, and then I think also just the culture that we've cultivated is I think fundamentally like that. And that's a combination, I think all three of us a little bit. Doesn't mean there's not drive and ambition. We don't want to do more and do things, but I think there's a healthy reality of what is good and what is just what's fun in life.
You would have heard me say many times on this podcast before that I am such a big believer in surrounding yourself with the right people. And that's why I'm delighted to partner with Sender. Sender is the OG startup accounting firm in Australia, catering to all stages of your business life. If you're busy running your startup, you don't always have the time to balance your own books or do forecasts, and instead you can fully outsource your finance function to give you the time, energy, and resources that you need back to do what you do best, which is growing your business. They have a dedicated focus on founders, funders, and startups, and have an experienced team that can help you with everything from managing your tax to balancing your books to even helping with your exit strategy. I trust and use them with all of my businesses and can't recommend them highly enough. To find out more or to speak to Gareth and the team, head over to sender.com. That's SCENDAR.com. All right, let's get back to this episode. Speaking of that kind of finding fulfillment and happiness, and that kind of being almost like a 10-year journey as well of doing that, we were talking offline about an investment that you guys have been making into a company that you initially invested in at the seed stage, that you did an SPV for. And I think one of the really interesting things that you mentioned was for the first 4 years of that company was tough.
Yeah.
And I think there is a lot of external expectation pressure that you have to be growing 100% year on year from day one. It needs to be up and to the right pretty much from when you launch. But, in reality, especially, in markets like Fintech or specific industries or verticals, it's not always the case. Again, do you want to talk a little bit about your sort of experience and kind of what you've seen with companies around that and advice to founders, maybe going through that?
Totally. So look, I think because we used to have, because of what we just talked about around our LP and our focus on fintech and adjacent stuff, I think we were inherently maybe geared and set up to be more patient in our investments in a way, because some of these investments take a lot of build and regulatory requirement and stuff before you can see payoff, right? And generally, venture, the more traditional path is you've got a consumer-facing proposition that's growing X% year on year or month on month, and all the metrics are working. Then you're there or not, and you make that decision as you go. We have found we invest in a bunch of companies that are not like that, where there is this slow build, but on the flip side of that, they have incredible moats. Right. So this company that you're referring to, a company called Aura, for the first kind of 4 or 5 years, it was a hard yakka. They were selling enterprise software to big box retailers, and they were a small company, a couple of young founders out of New Zealand, and it just took a long time to make the product ready for those retailers, have them adopted, go store by store, all those sort of things. So there's big patient build. Like, they were growing, but they weren't growing at a crazy rate. And then about 4 years ago, I think just clicked. They got the product at a certain level. They got, certain dynamics at play. where they kind of 10x their growth since then, right? And they are in all the major markets, so Australia, New Zealand, US, UK, right? Going into Europe, they've got most of the major retailers you would imagine in the world, right? Without naming names, you'll know them. But yeah, it took that journey. And I think what made that possible to invest in on the other side, so the question would be like, okay, well, great, why, like that, if that works, then why don't people just always invest in these patient businesses? The truth is, there's opportunity cost of the capital. So if you're investing in or used to investing in really fast growing businesses, then you'll go deploy capital there. The second part is this business particularly, right? There's a very strong moat around it, which is that it was a massive data network effect where the more stores they get online, the more data they get, the stickier it becomes. And that might be really hard and slow to get the first couple of retailers or stores on. But once you have X amount of retailers or stores, that incremental retailer wants that data, access to the same data, right? And that makes it incredibly sticky. So then what happens is you have very low churn, even though you've grown slowly, and then more people are jumping on to get access to the data. So you have accelerated growth. And that was a great example of this kind of business where, it had a great, like really strong fundamental business model that would take time to bake. Sometimes it just takes 9 months to bake a baby, right? You can't really accelerate that. And you just needed the right type of investors. And, it wasn't just us, there's other people in there as well that were willing and patient enough to go along that. And hopefully we all see a great outcome and the company's performing incredibly well. So we closed a pretty material SPV to lead that Series C for them. And we're confident they're going to go on and do some pretty amazing things over the next kind of 3 or 4 years.
Amazing. And just to wrap up, you mentioned that you have gone through one cycle through 10 years. I guess like what are the learnings and what are you sort of projecting to see in the next cycle for you?
Oof. Okay.
Maybe for you specifically, but also maybe the ecosystem.
Yeah. No, it's a great question. I think I'm just pondering what the right answer is. So I think cycles are interesting in the sense that 10 years ago, right? Like I think when venture was still new in Australia, I wouldn't say it was easy, but it was easier to do well as a fund, right? Like you were playing in, like there's a whole idea of non-consensus and right, like you probably heard of it in investing, right? So you want to be kind of in these places where not everyone's doing it, but you're going to be right. And I think that was easy to do 10 years ago, right? What we have found is that the incredible success of venture-backed companies everywhere, a lot of capital is flown into venture as a result. And is an interesting question of what is that right balance of capital and opportunity so that you do have great outcomes and you don't have 10 people competing for the same market. And I think that's the kind of space we're in right now, post interest rises, for that just working itself out. And I think based on how that goes, that'll be really informative on how that next cycle goes. But at the same time, you look at all of this amazing stuff that's happening in the world with AI and software, crypto, whatever it is, there's just so much possibility and innovation that I'm confident there'll be amazing companies that come out of it. The question is, as investors and even as founders, how do you go find the veins that will be successful, right? I think that's a TBD at the moment. I don't know, have some great insights on that. When I do, I will definitely let you know.
Yeah, amazing. Ron, I really appreciate you taking the time for your first ever podcast to come on and sharing your experience and insights. If anyone that wants to find out more, say hello, get in touch. What's the best way for them to do that? I
think Twitter is probably the best way, or even just come to our website. All the emails are on there as well.
Perfect. I'll make sure all those links are in the show notes.
Thanks, Ryan. And thanks for having me. Appreciate it.
Of course. Pleasure having you on.
Thank you.
Thanks for listening to episode 186 of the Startup Playbook podcast. As always, full show notes from this interview will be available at startupplaybook.co. I'll be back next week with another episode, but in the meantime, if you enjoyed this interview, please don't forget to like, share, and subscribe. As always, thank you for tuning in, and I'll see you next week.